So let me qualify this a bit more. So let me qualify this a little bit more. I don't want to just be defensive. I want to actually make money when the stock market goes down. I don't want to just buy defensive things. I want to actually profit from a downturn, not just be defensive and hold cash or something like that. But at the same time, I don't want this thing to completely explode if the market actually ends up going up. What kind of strategy would you recommend there? Yeah, exactly. There you go. So put spreads, not raw puts. Interesting. So defined risk bearish exposure. This actually sounds like a pretty good idea, right? So it's not just simply buying put options, because that's what I've done in the past. If you guys trade options, put options are the ones that actually make you money on the way down. So if the stock market falls, a put option is going to make you some money. But the problem with buying put options, though, is that they could be kind of expensive. It could be expensive to hold on to these things. So this actually makes a lot of sense. It's a put spread where you buy one put and you sell another one. So it's actually a lot cheaper to do this. Right? I think this is actually a very interesting idea. Yeah, and professional volatility desks, because they allow upside and corrections, but limited downside if the market goes up. Okay. Bias match your criteria. This is the only bearish tools where the wrong side risk is capped at a tiny fixed cost, and you still get real profit if the market dips. Perfect. And there's a collar, which is effectively a hedged bearish bet that still lets you recover if markets go up. So I think this is the opposite of an iron condor, right? Own something plus put spread plus covered call. That's actually kind of interesting. So you own something and then you get a put spread as well. And you also get a covered call on it to generate income. That's actually very interesting. And then there's low volatility via deep out of the money counter spreads or ratio spreads. So if you want to go long volatility, that's another really interesting one. So basically, if the VIX goes up, we make a bunch of money, is what that is about. Oh, and by the way, our back test finished. Look at that. Our annual return, 717%. That is quite crazy. It's a short back test, so that kind of makes sense. Awesome. I think this strategy is good to go. I'm going to start trading this thing. I'm going to trade this on the Tradier broker. There goes Tradier. And then I just want to make sure that this is the right account. 6YA 2014. Is this the right one? No, it is not the correct one. I'm on 55691. So what I'm going to need to do is I'm going to need to move this off screen for a quick second, guys, because I'm going to need to get our account number and access token set up on Tradier. So I'm going to go into my account here, account settings, and then I'm going to grab the account that we're on, which is 55619 There you go. So I'm going to put that in here. And then I'm also going to grab our API key. So API access. I'm going to grab this key here. I'm going to stick it in here. There we go. Good. And then I'm going to hit, now let me show you what I'm doing here. Now that I've moved over the sensitive stuff, I set the account number to the correct one. I set my access token to be what it's supposed to be. If you guys want to see how that actually works, here it is. There's our access token right inside of Tradier. So what do you think about that? Put it into the comments. Let me know. I respond to all of your comments. So I'm very interested to hear what you thought about the video and what do you want to see next. And of course, if you're interested in any of this stuff, go check it out at botspot.trade.